Welcome, Justin and Keisha, to Wealth Matters podcast. How are you
Hey,
guys
thank you
doing?
for having us.
How are you
Thank
doing
you so much
today?
for having us.
Thank you.
Doing well.
We're doing good.
Where are you right now? At home or somewhere outside?
We're at home. Is it bad sound?
No, it's great. So, can you tell us what do you do?
Absolutely. So, Keisha and I are real estate investors. We run a real estate firm, J.H. Brooks and Company, and we're authors, we're speakers, and real estate investors. So, best-selling author. I just was a part of the book Resilience, turning your setback into a comeback,
And so I am also going to be part of a project this coming spring. And we are also the founders of Real Life, Real Equity podcast.
That's right.
That's awesome. Yeah, and I do know about the book, of course, Justin, because I'm one of the co-authors with you, and I enjoyed
right.
your story thoroughly, and that's why I reached out to see if I can interview you both. So
Yeah, I appreciate it.
you mentioned about real estate, right? So why real estate, and what exactly do you do in real estate world?
Yeah, so it's interesting. I love architecture. I love design. I love buildings. I'm different when I walk into a room or into a house, or when I walk into a building. I look at things differently than most people. I'm looking at the ceiling and the architecture, the design. I'm looking at the curves of the building and the archways and the doors and the detail.
Wow.
So it's one of those things. My mind works a little bit differently, but if you go back, I've always had that entrepreneur mindset. I've always thought of real estate, and Keisha has a very similar story.
Yes. So for me, when I was growing up, I grew up in Boston, Massachusetts, and actually my grandfather was into real estate. He owned real estate on that coast and also in the South.
Yeah.
And so he had several different properties. He was always interacting with different people, doing things in the community, and he even eventually had his own company. So it just was really interesting to me. It's something that I've always been very familiar with.
That's great. So what do you exactly do in real estate? Do you guys buy single families, multifamilies? What's your sweet spot?
So we specialize in developing. So we're mixed use, assisted living. We do a little single family. We have three divisions of J.H. Brooks and Company. There's the investment side where we direct invest. There's the construction side where we construct and develop properties. And then there's the syndication side where we raise capital to fund deals.
That's interesting. So you mentioned mixed use, and then you also mentioned assisted living. And all of
Yes,
this are construction, or do you acquire and turn the properties around, do value add, or?
So we do a little bit of both. So we do ground up construction. We also do some value add. So our last project was an assisted living home where we did what most people would consider a ground up construction of a brand new house, but it was just an addition. So we did a 2,000 square foot addition development project with our partners, and we normally do a little bit smaller projects, kind of one-off assisted living projects. But as we have grown over the last several years, we've started to ante up a little bit. So we've started to get into a little bit bigger projects. And when we say mixed use, we're not just talking about multifamily. We're talking about mixed use office with retail below, or residential retail below. So it's a little bit of everything. We're starting to get into the more hospitality office space, looking at doing some projects in that space.
Yeah.
That is pretty interesting. And I myself looked into assisted living, not the mixed use side. So assisted living, how many beds or what kind of properties do you build or acquire?
Yes, so it's a 12-bedroom facility.
Oh, cool.
$1.5 million to $2 million price range for the construction and operations side of the project. We typically look at between 12 and 16 beds as our max for a home.
Right. because we want to make sure that we're able to properly operate the facility, but also provide the care that's needed for each resident that is part of the facility.
I'm glad that you mentioned about 12 to 16 beds because I was looking for similar properties here in Bay Area, San Francisco Bay Area, right? And I could always find 6 beds. And the more analysis I did, it just did not make sense financially. So, yeah, I dug deep and I found out 12 beds is where, you can maximize your profit, right? And as well as provide the care that is needed.
Yeah, 12 beds is optimal. We can go as low as 8. 8 you can actually run pretty effectively. There's a large market for 8-bed facilities. But 12 is optimal. So we like to kind of keep it around that 12 bed. It keeps the caregiver ratio, caregiver to resident ratio effective. It keeps it at a good level, allowing for the really intimate care that you want in an assisted living home.
Right.
So, and what do you do with this product? Do you build and hold? What's the strategy?
Absolutely. So we're buy and hold at our core. Not big time flippers. We love holding real estate. Every time I've ever sold a piece of property, I've always regretted it. Our first project was a duplex where we lived in one side and rented out the other.
Oh, you house hacked. Oh, that's cool. You house hacked also. Yeah.
That's right. Yeah, absolutely. And we were sad when we sold it. I mean, we were happy to sell it the first time, but about 3 months later, we had that seller's regret.
Right. Yes.
Of course.
Because that area particularly was continuing to grow. Until this day, they're still adding a lot more retail up there. It's almost its own little city. So it was like, oh man, what did we do that for?
And how do you operate these facilities? Do you guys have a manager or an operator you have given all of this like a property manager, or do you do hands-on and make sure that everything's going the way it's supposed to?
So with that first property, the duplex where we lived in one side and rented out the other, we actually felt like it was ideal for us to manage that property to begin with. Because you always want to kind of get a feel for what's going on, what's needed, exactly how to run the operation. So that way, when you do hire a property management company, then you know what to expect. You're not blinded from any unexpected thing. So eventually, once we got our next property, we acquired a single family. And we did go ahead and reach out to a property management company.
Yeah, we did. But also, like coming now to today, even with our assisted living, we hire a professional manager. I mean, we don't necessarily have a management company that we use, but we have a professional operator, somebody that's been in the business for over 20 years. We have professional team members who are servicing the property, professional contractors who build the properties and design architect teams. All of those things. So it's not a one-man show. It's always about the team.
Right.
Of course. And that's where I was going, right? So the operator is employed by you. It's not a third-party company, all your and the care providers. Is that correct?
That's right. That is correct. Yep.
Okay. That's interesting. That's pretty good to know. And what kind of returns do you see in assisted living or personally when you are doing it by yourself? And if you have investors, how does that work?
So typically we look at double-digit returns. Not making any guarantees or promises for the future. But again, historically, every property that we've invested in has gotten double-digit returns. We've taken losses on some properties in the past when we were growing, and I think we're going to talk about that here in a minute. But when we were growing and learning, we took losses. I mean, and that was our education.
Right.
So anybody who ever tells you they've never lost any money in real estate, I turn around and run from them because that's not necessarily the truth. And if it is the truth, they're getting ready to lose money, and it might be yours they lose. So I've lost enough money in real estate in the past, right? I've lost enough money in the past in real estate to have learned from those mistakes and to move forward. But, in an assisted living facility, you're looking at double-digit returns, in the high teens, 20s as a conservative estimate. You're looking at, in the single family, I mean, I dare to say you could very easily make 100% returns in your flips. I mean, the velocity of your capital going out in the year could create very high returns.
Right. So I'm glad that you mentioned about education, right? Because people ask me, oh, why do you go to these conferences? Of course, we met at a couple of conferences, right? They're like, oh, you are spending so much money. And I keep telling them that you are going to spend money on education one way or other, right? It's going to
Absolutely.
conferences or attending these courses or buying real estate or something else and then losing money on it. That's your education. You learn from your mistakes and move on, right? So I'm glad to hear from you as well that, yes, you lost money and that's the education part of it, right?
Right.
I agree. Yep, we did.
Can we jump to mixed use as well? So why mixed use and what do you exactly do with mixed use as well? Do you also have a separate operator or how does that work?
So as we grow our mixed use, our development part of our business, it's mostly a lot of that is third party managed. So we're looking at our first project. We've been in contact with professional property management companies,
right,
who have discussed with us the strategy to best optimize management for a mixed use property. So, for example, a commercial leasing company that takes care of the retail, that takes care of the multifamily lease up, that takes care of the office lease up. All of those things are taken care of by a professional property manager. Now, being that we have not gotten into our first deal yet and we're still doing our due diligence, we're not offering anything in that space yet. So and although it's our project, in mixed use, we're still not open for investors yet.
Yeah.
Got it. So give me an idea about a deal like your one of the best deal where, or let's talk about the best deal you did yourself, and then we can talk about a deal where you had investors in the deal as well.
So the best deal that we have ever done.
I feel like it's a second duplex.
That's a good one.
Yeah.
So the second duplex we bought. Okay, so it's interesting. So we had a friend, really good friend, still a friend today, and we inspired him. So we went out, bought our first duplex. He said, Justin, I really want to do what you've done. How did you do it? We explained to him what we did. So he went out and bought a duplex also. He lived in one side, rented out the other. I lived in one side, rented out the other. A funny thing is that we had to put up some ceiling fans. So he came over my house and he looked at the house and he said, oh my God, this is beautiful. I'd love to buy it. I said, well, one day I'll sell it to you if, when I'm done with it. He said, okay, well, great. Needless to say, I did not have a clue that one day would come by really quickly. So I ended up selling him my duplex. We switched houses. So this is really funny. We switched houses. I rented from him for a month. Yeah, I rented from him for a month so that we could build our house. So we constructed, we had to do a full-blown, like, stud to roof redevelopment of our own house we live in.
Right.
We lived in that house, in his duplex for 1 month, then moved into our house we live in currently. And what ended up happening about a year later, he calls me because we stayed friends. He said, Justin, I can't do this anymore. I'm getting really stressed out by owning these two duplexes. What should I do? Yeah. So being a friend, I said, hey, you probably could sell them. I started calling my friends that are realtors. I said, you could probably sell it for a good amount of money. Mm-hmm. He said, well, Justin, I just need to get under it, out from under. I'm really stressed out. I said, okay, well, listen.
Wow.
Here's what I can do. I said, I'm in the middle of a project right now. So I said, I can negotiate some terms, but, it's going to have to be, more favorable terms because right now my cash is out on these projects. And he said, Justin, I don't care. We're friends. You make it happen. You tell me what I need to do. I'll sell it to you right now. And so long story short, he sold it to us. Now, it was a win-win because I told him to use a realtor. You could sell it right now. I told him he could make a profit. He said, I don't want to do all of that because he wants to get out from under it. He wanted in like the next 2 weeks.
Right.
Wow.
We ended up closing on this house in 2 weeks. So here's the best part of the deal. So we ended up closing. In the contract, I wrote that I wanted all the deposits. Like any good investor, you make sure you get the deposits. I got all the deposits. I got the prorated rents for the month that I was in. and the rents going forward. We negotiated a decent down payment, and I ended up coming to the table with very little money down for that project.
That's awesome.
But that wasn't even the best. That wasn't even the best part. He seller financed the deal.
Oh, wow.
And not only did he seller finance, this is some stuff that happened like in, this would be like a 2010, 2011 deal, but this happened in 16.
Yes.
Mm-hmm. So not only did he do that, not only did he do that though, we turned around and ended up selling it for a large 5-figure profit, a couple of years later. So it was well over $40,000 we made on this property. Off of this one little transaction. And I mean, when I say little money down, it was, a couple of grand. So that was probably the absolute best deal that we've ever done.
Yeah, I don't think you can beat that. And it's a funny story. So any deal you want to talk about where you had raised capital from investors? Be it
No, I mean, not particularly. I mean, I think that as far as like standout, that was probably the most standout deal because as far as returns are concerned, as far as overall hold period, as far as the structure.
Yeah.
We could go into deals, but I mean, when I start looking at deals, a lot of them come out to be about the same. So we want to, put our best foot forward and talk about the absolute best deal we had, and then go into our worst deal. Mediocre isn't really something I'll enjoy talking about. And a lot of our investor deals are a lot of real straightforward. You get a double-digit cash-on-cash return, relatively stable. Just getting in, making your money. You get your return, move on.
Oh, that's awesome. So yeah, of course, you and I just discussed about losing money on real estate as well. So of course, this is coming. What's your worst deal?
Probably the first house we bought. Maybe no.
No. So I know which one. It's gonna be the one. What was that one? Is it Norton? Was it Norton?
No, I don't know. It was one. I know what you're talking about. So
yeah.
You're talking about the one where we did had the sewer line go out on us 3 days before closing. Or 3 days before
so.
we,
and then I had to do the landscaping and all that.
Yeah. It was a beautiful home. I don't exactly remember the address. It was a beautiful home though. Mm-hmm. We really put our best foot forward. It was really going well. But we had a couple of things come up in the middle of construction that caused us to have to put out more capital than we thought. We planned on it a little bit, but the big thing that happened was I promise you, this always happens on every deal. Right when you're ready to be done with the deal, something pops up that you got to write one more check on. And it just so happened that my contractor tried to flush the toilet and it wouldn't go down. And I said, okay, well, this isn't a big deal. My contractor's probably just trying to get some more money out of me. So I said, okay, roto-rooted. So he went over and he got a snake. He snaked it out. Justin, I can't get through. I said, okay. I still don't believe you because, you're going to have to prove it to me because I'm really not trying to put out any more money. We're about to list this thing. I mean, it was the Tuesday. We were supposed to list it on Thursday.
Right.
I said, I'm going to the Home Depot. I'm picking up a snake, and I'm going to snake it myself. I'm proving to myself that it's not going to go through. Needless to say, it did not go through. We had a local plumbing company come through, and they said that our line was blocked. And so we ended up having to put out a relatively significant amount of money on this new sewer line because they said it was one of the top 3 worst blockages they'd ever seen in the history of their plumbing business. So yeah, so it was a pretty raw deal.
So what were the numbers in the end? What happened in the end?
We ended up losing on that deal. It was a loss on our part. We took a loss of, I think it was around $7,500 to $10,000.
Wow. So what was the key takeaway out of that one, or what was the lesson learned?
It was too thin. The deal was too thin. Not only was the deal thin, we had a lot of factors that played into our demise. It's never one thing, right?
Right.
It's always a bunch of little things. So the biggest thing was that we had too much expense creep. We had an expense creep on an upgraded tile. We had an expense creep on having to hold it longer than anticipated. We had an expense creep on the sewer line. The financing terms were a little expensive. I mean, I probably could have found a better deal on financing, which would have allowed us to make more profit. And it probably would have taken away the $7,500 loss and at least allowed us to break even. So it was a couple of things into play, but it was one of our first deals also, and it allowed us to grow and learn quite a bit.
Yeah, I would say too is that, you know how you get that eerie feeling like, okay, I know something's not right. Maybe I should change this up. I'm thinking I should go with my gut, but then you still attempt to make it work. I think with that deal, and probably as we've gone through our learning process, that has happened. And so the takeaway is to simply stop, rethink it, go over the plan, and then approach cautiously.
That's right. That's right.
And that's a great point you brought up regarding learning process and growing the business out of that deal, right? Because now you went through the entire life cycle, and you have also built a rapport and relationship with, let's say, contractor, plumbing company, or you find the right resources now, right? So that's how you are able to grow the business. That's a great story. So not knowing what you know now, what would you have done differently overall, not only just this one deal, where you are right now?
There is it's a duality to the answer to this question, and I hesitate to say that I would do nothing differently, because everything you experience is a part of your education. And so what we've experienced at this point, I believe that it allowed us to be who we are today. But there's also that part of me that says, if I had just went a little faster, maybe I could have gotten a little further. So the honest answer is, I really like the idea of where we are today. I like the idea that I've learned so much, because even through the losses, if you can figure out the silver lining in your loss, you can really grow from it. And if you don't ever lose, how can you ever win? Yeah. Success is nothing more than a mountain of failures that you are able to stand on top of and not buried by.
Right. And you just never know what scenario can come your way, or how you can help somebody else get through a situation. Right. If you're always on top and always doing the right thing, how do you ever know how to overcome?
That's right.
That's such a great point. Actually, I enjoyed that. Mountain of failures. Yeah, that makes so much sense. Hey, so any books do you recommend? I know you are going to say Resilience, turning your setback into a comeback, but other than that.
Resilience, turning your setback into a comeback. No. So you and me have talked about this. I've read so many books. So do you want me to just rattle off a list of all the books that I just love off the top of my head?
Yeah, one would be enough.
One, okay.
Absolute
one. The top book.
You can do one and I'll do one.
Okay, so one of the most impactful books that I've ever read is How to Win Friends and Influence People by Dale Carnegie.
That's a great book, man. That's a great book.
Yeah.
And so one book that I really like is The All-In Startup by Diana Kander. It's a really great book, especially for the entrepreneur that's just getting started.
That's a good book, yeah.
I have not read that book. I'll put that in my list as well. So thank you both. How can my listeners reach out to you?
Yeah.
So the best way to reach out to us would be, the email address is info@realliferealequity.com. And so that's just info at realliferealequity.com.
That's great. So I thoroughly enjoyed this conversation, and I wish we could go on and on. But we'll have to end here. Yeah, we'll have to end here, and I'm hoping we'll do this again in 6 months or a year's time, and we'll see the progress you guys have made and where you are at that point. So thank you so much for taking time out of your busy schedule today.
No, thank you.
No,
Thanks for having us.
Thanks for having us.
Thank you. Have a nice weekend.
You too.